Hi everyone and welcome to today's morning report on Monday the 10th of August with me, Rich Perry, market analyst at Handset Markets. European trading sessions started off reasonably well and then just turned around as trading really started to get going. Markets are now lower on the day, quite sharply actually, lower on the FTSE 100, which is about 0.75% lower. DAX down 0.3%. Once again it's China really that's dominating the markets. We had data out over the weekend. Trade balance and more specifically the exports were really disappointing. Exports expected to come in on a negative 1.1%. They actually fell by 8.3% on that, and that is a real concern for global growth generally. And also we had producer prices which were disappointing as well. So all in all, although the this sort of heightens expectations potentially of some sort of rate easing, or monetary policy easing by the PBOC, the People's Bank of China, and that did help to support Asian markets overnight. I think the European session is sort of focusing more on the commodities side of it and the impact that's having, and certainly that is putting pressure on the commodity heavy FTSE today. In terms of forex markets, well, we're a little bit mixed actually, because we're still sort of digesting this news out on Friday about non-farm payrolls. But interestingly enough, just the market generally seems to have it in its head that a September rate hike is now sort of on the way, and this payrolls report on Friday sort of backs up that to a certain extent. But if you look at the forex markets, you wouldn't say that is the case really. You've had quite a sharp reversal on the dollar index, and that is actually a bear key one day reversal, or a bearish engulfing pattern, however you want to look at it, which is not a very positive signal if you're a dollar bull and you're looking towards tightening, because that, I suppose, that could be arguably one of two reasons for that. Either it's all priced in, a rate hike, or the market is not as convinced as perhaps some would have you believe, and perhaps I'm thinking that it's that latter one there. So that's, I think, why we're seeing a little bit of sort of dollar buzzing around still. It's not really convinced by this September rate hike in my opinion. But we shall see. Obviously, there's another payrolls report in front of it anyway, so we'll see how it goes. But that certainly seems to be the case today. Bit of dollar moving, but basically flat against the euro. A bit stronger against the pound. But the main movers are the commodity currencies, which are all weaker on the back of that Chinese data. In terms of economic data today, we've not got anything really, apart from a couple of Fed speakers. We've got Dennis Lockhart, who recently came out with fairly hawkish rhetoric, so that he's speaking this afternoon. But also Stanley Fischer, who's a bit more of a moderate, bit more of a centrist on the committee, and it'll be interesting to see what he has to say. So these two guys could well drive sentiment today in the afternoon. So that takes me on to my chart today, which is silver, and I think silver is very interesting because it could well be a bit of a harbinger for gold. And what we have got is silver, which has broken this downtrend channel. Now, downtrend channel breakdown, or break, I suppose it's break higher actually. A downtrend channel being broken doesn't necessarily mean you're going to get a rally. It just might mean that you're in a bit of a consolidation phase. And at the moment, we are in a consolidation phase, certainly on silver. And look at this resistance time and time again in the last sort of 3-4 weeks. $15 has hit the resistance, and again on Friday it's sort of had a bit of a poke at it at 14.96 today, and then fell away slightly. So that is still clearly a big resistance in place. Let me just show you very quickly on the hourly chart. Here we have that resistance in place. I've got 14.90 there, should be 15. And you can see here that resistance at 15 is quite significant near term. And if you break out through that, then theoretically that is a small base pattern. But I would take that as a small base pattern that would just merely be unwinding you back towards this 1550 level. 1550 being this big sort of old floor in the silver price around that 1550 mark. So I would say that would just merely be unwinding that. So I'd say it's just still would be a bear rally in this silver market. And it's interesting that that could have implications for the gold price. I'll talk about that in a bit as well. But certainly at the moment, that $15 resistance is in place. It hasn't been broken yet. It needs, I think, to have a closing breakout above $15 to really start to show the recovery in place. And the stochastics are decent. RSI is also fairly decent in terms of the rally. And it's actually RSI is actually already at a 10-week high, so that's interesting. But certainly the momentum is improving, and it could well be that it is a bit of it's moving towards a move higher on this above $15. But I would still see it as a bear rally towards 15.50 before ultimately probably going to be coming under further selling pressure. So lots going on in this silver price, and I'll talk about gold in a little bit, and we could see what sort of implications that could have for gold. But I will wish you good luck in your trading today, and I'll speak to you later. Thank you.